ladies and gentlemen. Welcome to the study circle meeting on disallowance under section 43BH, which has been the topic of our discussion across, and also section 148A, reassessments under section 148A. So to address and then enrich us with this, we have our speaker CA Prakash Hegde. I request our chairman CA Hegde to escort him to the dais and greet him. So welcome to you. And we have a I request our chairman to address again.
Good evening, members. I would like to extend a warm welcome to all of you for this CPE seminar today. Today we have CA Prakash Hegde among us, who will be guiding our discussions and sharing his valuable insights. Our agenda today focuses on two critical aspects. One is section 43BH and section 148. 43BH, I know it's already taken a limelight, and we are all aware that most of them are awaiting that the section might be postponed, still hoping to be postponed. But of course, from the act of the government, it's pretty clear that it has been included even in the reports. So I think there is a very near chance of getting postponed. And apparently, this section was a very useful tool when it was proposed to the government, saying that the MSMEs are the backbone of our Indian business and they're not getting their timely payments. And for that, now we are requesting, yes, please do try to extend this provision or delay this provision by a year. Of course, that is also which is advocated by us, so that's the reason government has been unhappy on this, procrastinating this section. And turning to section 148, this provision grants the income tax officer, income tax department, the authority to reassess the previously assessed tax and necessary measure to prevent a fiscal evasion and ensure a comprehensive tax compliance. Today, under the guidance of CA Prakash Hegde, we will delve into this topic as well. This topic, I think I will not be able to do justice in 2 hours. I think we will hold another detailed deliberation, and considering the recent judgments also, I think this topic needs a very deep diving discussion. So we will have another session where we will go into it deeply, but I request you to take the main thrust of the provision and how we deal with it in the current scenario. And also Prakash Hegde, how I know is you can ask your silly doubts. He is very patient to answer any of the questions you ask. So please feel comfortable. Silliest of the silly doubts are also encouraged, because we can't go back and then think about, oh, if I had asked this in my seminar, probably I would have got the right answer. So please go ahead. Thank you for all your attention. I look forward for a rigorous learning and thoughtful exchange of thoughts. Let us all make this most of this excellent opportunity and ask the questions. Thank you. Over to you.
Thank you, Chair. Let me take a moment to introduce our speaker for the day, CA Prakash Hegde, who is known for his lucid explanation and delivery of address. He is a commerce graduate and an LLB graduate from Karnataka University and a fellow member of the Institute of Chartered Accountants. He holds a Master of Business Administration degree in Finance, and also he has been a university topper in BCom as well as in LLB. He initially worked as an advocate and then with Tutaga's Cooperative Society, Sales Society Limited at CSC as the CEO of that society, and later he moved on to Big Four and where he worked for 10 years across international taxation and other corporate taxation fields. He is now practicing on his own. He has advised many leading international companies and cooperative societies, high net worth individuals on various subjects ranging from expat taxation, international taxation, VAT money, and so on. He has conducted many seminars, authored many articles which are published in many newspapers, and argued several cases before the various tribunals. So it's a pleasure to have you, sir. Thank you for accepting our invite and being here. Over to you, sir.
Good evening, everybody. Thanks to Bangalore branch of ICA for giving me an opportunity to interact with you. When we try to speak on a subject, obviously we need to be prepared, and that is the reason I choose to talk. Not to educate people, but I will be learning in the process. It will compel myself to read something, concentrate on something, and also discuss on that. I thank Chairman Shri Prakash Hegde, perhaps the youngest CA to occupy this important position, and also his colleagues and all the members of the team. I should also congratulate them on getting an opportunity to host a program with Finance Minister Nirmala Sitharaman just 2 days ago. I witnessed the function. It was conducted in such a professional way. Really, I was happy with the Bangalore branch and the team in the way they managed and conducted such an important session. Congratulations on that. Coming to the subject, today we are supposed to address two important aspects. Perhaps each of the subjects will take a minimum of 2 to 3 hours. What I am trying to do now is, as mentioned by our chairman, we may have to have a very detailed discussion for the assessment part. Now, in the first part of the discussion, let us concentrate on MSMEs, and in the time which is left, let us concentrate on reassessment. On the reassessment part, at this juncture, I want to concentrate mainly on the important aspects, because every day, every hour, we are getting so many judgments, Supreme Court judgments, High Court judgments on the provisions of Section 148 and 148A. I will try to cover the main principles, and based on that, perhaps let us have a very deep and detailed discussion sometime later. Now, to start with, Section 43B, Clause H of the Income Tax Act. This specific clause has been introduced from the financial year 2023-24, that is with effect from 1st April 2023. In the Act, they have referred to it as with effect from 1/4/2024, which means that is the beginning of the assessment year. Many people and many even authors got confused with the date on which the particular clause commenced. But please remember, actually it started on financial year, or what we call as previous year, 2023-24. So all those provisions in this clause H are applicable for the last year and thereafter. Particularly this is important in the returns what are to be filed in the assessment year 24-25, and also for the tax auditors for the purpose of reporting. Accordingly, Form 3CD has also been amended. We will specifically mention the language which has been used in 3CD and how a tax auditor has to protect himself. Let us discuss that as well. Now, with regard to MSMEs, we need to remember that MSME Act was enacted in the year 2006 to specifically give certain benefits to micro, small and medium enterprises. What is micro, what is small and what is medium, we are going to discuss that. This is the purpose of the Act, to protect the organization, the smaller organizations. The importance and role of the smaller organization is not too small. If you can see, about 45 to 50% of the export contributions are done by MSMEs in India. Only the remaining 50 to 55% belong to the larger organizations. 95% of the business units come from MSME, which is a very huge number in the Indian context and in the Indian scenario. Because of that, MSME Act was enacted, and also the Income Tax Act wanted to give some additional encouragement to the MSMEs. That is the reason why this particular clause was introduced. I am referring to the specific provisions of Section 43B. Let us just go through how it reads after the insertion of Clause H. Clause A to G, there are totally 8 A, B, C, D, DA, E, F, G. There are 8 clauses which are already there until 2023. H is the new clause which has been inserted with effect from 1st of April 2024. Notwithstanding anything contained in any other provision of the Act, so this has an overriding effect. Whatever the other provisions of the Act read doesn't matter. This provision is going to prevail over all those provisions. A deduction otherwise allowable under the Act in respect of any sum payable by the assessee to a micro or small enterprise. Please note, medium enterprises are not included here. Only micro and small enterprises are included. Whereas MSME Act covers micro, small and medium. Here it is medium has been excluded. Beyond the time limit specified in section 15 of the Micro, Small and Medium Enterprise Development Act 2006 shall be allowed irrespective of the previous year in which the liability to pay such sum was incurred by the assessee according to the method of accounting regularly employed by him, only in computing the income referred to in section 28 of that previous year in which such sum is actually paid by him, provided that nothing contained in this section except the provisions of clause H shall apply in relation to any sum which is actually paid by the assessee, blah blah blah. So A to G is a separate group, H is a separate group, because if you can see, except the provisions of clause H, they are giving relaxation of deduction if it is allowable. Otherwise, even if such payment belonging to a particular financial year is paid after the financial year, but any time before the due date for filing of income tax return under section 139(1) within the stipulated timeline. Say for example, A to G cover quite a number of expenses. It could be contribution to employee provident fund, or it could be employee gratuity fund, or it could be statutory levies or other taxes, etc. All those will still get a deduction if they have been paid before the due date for filing of the income tax return under section 139(1). Whereas this clause H is an exception. Deduction for this clause H, that is the payment made to micro and small enterprises, will not be allowed unless they have been paid within the stipulated deadline as per the MSME Act. We will see what is the deadline or the due date for payment of and payments under the MSME Act. Explanation has given the definition of micro enterprise and small enterprise. It simply says that you have to go by section 2 of the MSME Act. We are going to discuss that as well. Already mentioned that this particular clause is applicable from 1/4/2023, and therefore it does not apply to any outstanding amount as on 31st March 2023, only for the amounts which are payable for the goods or services purchased from micro and small enterprises from 1/4/2023. This particular provision is going to hit. If payment is made to micro and small enterprises within the time allowed by section 15, then section 43BH will not apply. Section 15 of MSME Act, which speaks about the due date for payment under the particular by the particular date. If payment is made to MSE, I am using the term MSE to say micro and small enterprises because medium enterprise is excluded. Beyond due date, as per section 15 of MSME Act, deduction has to be allowed only in the year of payment. Benefit of proviso to section 43B not available. We discussed that. It is irrelevant in which financial year such liability was captured by the assessee basis method of accounting regularly employed by him. See, the assessee may claim that he is going to capture the expenses in a particular financial year. But it does not matter. What is the due date for payment under the MSME Act? Based on that, the deduction, and also based on that whether the payment has been made within the due date will be the basis for the deduction. It does not go by the year in which this expense has been booked by the assessee. The government initiated the whole process with some good purpose. It wanted to protect MSMEs. 2006 Act and the provisions, all that speak about that. If you see the MSME Act, the whole provisions from section 15 to 23 particularly, they speak about interest payable. They speak about in case of the provision of the Act, because of the delay in payment of the amount due to MSME, if interest is payable, that interest cannot get a deduction under the Income Tax Act. Then if there is any transactions with MSME, if there is a delay, non-payment, all that has to form part of your audit report. You have to give in a particular way. All those have been covered. And this new provision has gone one step ahead to say that not only the disallowance for interest, but also for the payment itself. But unfortunately, the government has nowhere realized that MSMEs are getting hit because of this provision. Perhaps you would know, in most of the cases, if a particular service provider or say a manufacturer gives the details saying that he is MSME, many of the buyers are running away. They do not want to deal with the MSMEs. They are okay even if it is a little expensive affair to deal with some other people who are not registered on MSME, but they don't want to transact with MSME. That is the harm which has been indirectly done by the government. This has been highlighted by the chambers of industries and commerce already, and we were expecting that this clause will be deferred by at least 1 year. So far, the announcement has not been made, and it's very unlikely to be made. There was a thick rumor around March that this particular clause is getting deferred by at least 1 year. More than MSMEs, auditors were happy that they did not have to report, but it didn't happen, and it's very unlikely to happen. To understand what is a micro enterprise and what is a small enterprise, let us go into the details. When the Act was started, the criteria was slightly different. For manufacturing industries, they had given a different criteria, and for service categories of the enterprises, they had given a different criteria based on the capital investment and the turnover. With effect from 1st July 2020, they have made substantial changes. Now, whether it is manufacturing or service industry, the same criteria will hold good. Investment in plant and machinery and turnover, these are the criteria which would be applicable. What is a micro enterprise? Micro enterprise is an enterprise where investment in plant and machinery does not exceed 1 crore rupees and turnover does not exceed 5 crore rupees. Both the conditions should be satisfied. Say for example, the turnover exceeds 6 crore, or say it crosses 5 crore, could be 5.5 or 6 crore. Even if the investment is less than 1 crore, it will not qualify to be micro. Similarly, small enterprises where the investment in plant and machinery does not exceed 10 crore and turnover does not exceed 50 crore. Clear? Yeah. As a buyer and as an auditor, you need not have to worry too much on how much turnover each of the suppliers has. I will explain further how you will have to find that out. Because say some of the people are under the impression perhaps for each of the suppliers they will have to collect their profit and loss account, income tax return, etc. to identify all this. No need to do that. We will find a simpler way to do it. Can traders be micro and small enterprises is the next question. Because everywhere they speak about manufacturers and service providers and not the traders. Traders are initially not included as part of the MSME entities. But there was a delegation, there was a lot of discussion and request from the traders that they should also be included for some specific purpose. Later, an amendment was brought in, and there the government decided to include retail and wholesale traders also as MSMEs, and they were allowed to register on the Udyam registration portal. But benefits for these retail and wholesale traders are restricted only to priority sector lending and not for anything else. So MSME provisions with regard to traders is restricted only for priority sector lending by the banks or other financial organizations, but other benefits are not applicable. So clause 43BH won't be applicable in case the supplier is a trader. It's applicable only if the supplier is a manufacturer or a service provider. Next question is whether works contract is manufacturing or whether it is a service industry.
It's classified as service as per GST Act.
Could you please repeat your question?
Yeah.
Could you please repeat your question?
Whether a works contractor or a works contract service provider falls under the manufacturing category or the service category.
Service category.
That is the understanding generally we have. But even in the MSME Act, there is no clarity on that. There have been quite a lot of litigation as well. But it is safer to consider that they fall under the service industry, and also it may not matter much as far as 43BH is concerned. Any questions so far?
So just a small clarification. So just by going by your analogy, you told that for traders who are retailers and the wholesalers, if they are doing business with them, even if there is an outstanding as of 31st March, so they're not, even if the payment is not done within the 45 days, so 43 should not get triggered.
Yes.
Even the reporting, how about the reporting criteria and tax audit reports?
It's not required.
It's not required.
Not required. Because tax audit report specifically refers to the disallowance under section 43BH. So the payment to traders will not get covered there.
So which all categories of vendors are excluded from 43BH? Could you please just throw some light on that?
See, basically, there are three categories into which an MSME can fall. One is manufacturing, the second one is service, the third one is trading. Traders are excluded, manufacturing and services are included. That's it.
So for this purpose, we have to check the status of the entity for 2022 or 2023, sir. Because some entities, they ascend from micro to small, small to medium on regular basis. So for checking this, whether I have to check the financials, the MSME status for 2022-23 or 23-24, sir.
You have to check it as on the date of the transaction.
Okay,
Because,
so 22-23.
yeah, because an entity may shift from one category to another category, and it may be recognized by the MSME portal anytime. Say if you deal with a particular supplier in April 2023, he may be in the medium category, and suddenly say by June he may fall into the micro category. You never know. Practically this is going to be a very serious challenge. But that is how the whole provisions read. At the time of entering into the transaction, whether it falls into micro or small, that will be the basis.
So one more thing, the status of the vendor keeps on upgrading, and during the middle of the year it gets upgraded. How are we affected by it? We keep asking for them regular updated MSME certificate.
No. You can ask for the Udyam registration number, and while entering into the transaction, or maybe on a regular basis, it could be say monthly basis or something, you can check and identify whether he is falling into the medium or micro or small it will be available in the portal. You need to check that. And I heard that some people have developed a software where you can find out the status even if you have bulk numbers. Say you have hundreds of suppliers or thousands of suppliers, you may be able to generate the report quickly. I have not seen that, but somewhere I have read it.
If the registration is cancelled with supplier, whether this provision applies?
This provision will apply until the date it is cancelled. Yeah. From the date it is cancelled or from the date he gets himself registered, this provision will be applicable.
Just a small question, continuation the query what sir has raised. So for an example, in a particular scenario where a supplier is providing me a service and also I'll be procuring the material from him, whereas in his Udyam registration he has registered only for his service. So should I go by what the nature of procurement I am taking, or should I go by his registration status in Udyam?
You should go by the registration which is appearing.
Okay, even if I am procuring a goods from a person, if he is registered in Udyam as a service provider, then 43 is very much applicable.
43B should be applicable. Again, see, a service provider may be a pure trader as well. And if he is into trading activity with you as a supplier and you as a buyer, by going by the logic, the provision should not apply.
Exactly.
But going by the reading, it should apply. Because they go by the categorization, not by what they are doing for that particular purchase. They are not going by that. They have done the categorization. Based on that, you need to apply all this. Yeah. Traders are allowed to be registered on MSME portal. Benefits of registration are only for the purpose of priority sector lending. Mere registration of traders on MSME portal will not entitle them to claim as micro, small or medium enterprise. No benefit of MSME Act are available to them. For the purpose of section 43B, traders MSME to be excluded. So we need to go by the category under which they are registered. Interestingly, under the MSME Act, the central government has wide powers to define so many things. The office memorandum and the notifications issued by the central government determine most of the things there. And one of them is the office memorandum dated 26 August 2008. In the absence, this is rather a clarification which has been given by the central government, and it is going to help us as auditors to a great extent. In the absence of suppliers mentioning their MSC status on their supply orders, invoices, letterheads and other relevant documents, it would be very difficult for the buyer entities to identify MSC suppliers, their dues, disclose them in annual accounts, comply with section 15, and for auditors of buyer entities to verify required disclosures in annual accounts. The office memorandum clarifies that it is advisable that micro or small enterprises should mention or get printed on their letterheads, supply order sheets, invoices, bills and relevant documents the entrepreneur's memorandum number, so that there always remains an identification of being an MSC supplier. This is an advisory, not a mandatory condition to get the benefit as an MSC. In case, as an auditor, when we are verifying the documents of the supplier, if you find out the registration number, it would be easier and helpful for us. Assume a situation you don't find such numbers on the letterhead or invoices or on the order. You can't just shrug your shoulder and say that it is not registered or it is not given. So therefore I did not check. As a matter of caution, you are required to get into the details. Check with the client whether they have got a clarification or confirmation from the supplier that the supplier does not fall into any of the specified categories. If the client has got a confirmation, clarification, well and good, otherwise as an auditor, you are supposed to seek and reach out to each of the suppliers to find out whether they are falling into MSC category. it's the extra burden. And as you know, the guidance note on audit and all the audit SOP specify that you need to necessarily collect enough evidence, and also you have to get confirmations from the respective outside parties. So for that purpose also you will have to reach out to the concerned suppliers to find out this. In case they have mentioned that they are registered, it would be easier. If they don't mention, then you will have an extra burden. Let us have a look at some of the provisions of MSME Act. Section 8 of MSME Act, any person who intends to establish micro or small enterprise may at his discretion, etc., shall file the memorandum of micro, small, or as the case may be, of medium enterprise with such authority as may be specified. Here, see the wordings what they have used. Who intends to establish. So, in other words, MSME Act considers a micro or small enterprises to have been established only upon registration as specified. You may have a supplier who is otherwise eligible to qualify as a micro or small enterprise, but for the reason he has not registered himself, you are not going to treat him as MSME. That was one of the confusion we had. But from the reading of these provisions, of course, this is an opinion. I may be wrong also if the later courts may hold otherwise. But based on the reading of the language, if somebody is going to establish micro or small enterprise, they have to necessarily do all these activities, shall file the memorandum, and they have to get it registered. Without the proper registration, even if they are otherwise qualifying, they will not be treated as MSME. Section 15 of the MSME Act, what does it speak? Liability of buyer to make payment. Where any supplier supplies any goods or renders any services to any buyer, the buyer shall make payment therefore on or before the date agreed upon between him and the supplier in writing, or where there is no agreement in this behalf, before the appointed date, provided that in no case the period agreed upon between the supplier and the buyer in writing shall exceed 45 days from the day of acceptance of the day of deemed acceptance. Section 2 speaks about appointed day, because in the first paragraph we mentioned appointed day. What is appointed day? It means the day following immediately after the expiry of the period of 15 days from the day of acceptance or the day of deemed acceptance of any goods or services by the buyer. So in case the customer or the client purchases some goods on 1st of April 2024, the appointed day will be exactly 15 days from that date. So it will be 16th of April. If there is no agreement between the client and the supplier, payment will be due on 16th of April itself, which will be exactly 15 days from the date of purchase. In case there is an agreement, it is possible to extend up to 45 days. Say, as per the agreement, it is 30 days. Then that payment has to be made within 30 days. As per the agreement, if it is 45 days, payment has to be made in 45 days. As per the agreement, if it is 60 days, the payment has to be made within 45 days. It cannot be extended beyond 45 days. And for this purpose, even if in the purchase order a particular date has been mentioned, say the payment will be made on 40 days, 40th day or 30th day, it is still a valid agreement because it's in writing. But if there is any oral understanding, it is not an agreement. Agreement has to be writing. The same section continues further. For the purpose of this clause, the day of acceptance means the day of actual delivery of the goods or rendering of the services, or if there is any objection in writing by the buyer, then within 15 days from the day on which such objection is removed. there is some protection for the buyer as well. Say a service has been provided by a supplier and service is not up to the mark. And from the day the service have been provided, within 15 days, the buyer is supposed to make the payment. Assume service is not up to the quality. Then buyer has to necessarily raise an objection in writing within that 15-day period. If he raises the objection within the 15-day period, then the payment due date will start counting from the day that objection is cleared by the supplier. If there is any defect in the service or if there is any defect in the goods, from the day it has been rectified, the date starts running. But assume the objection has been raised after the appointed date, after say 15 days. The amount would have already become due, and even if the objection is raised, the payment is already due and it's payable. If it is not paid, interest will start running from that day. Important thing is, objection has to be done within the specified period. It should be in writing. The day of deemed acceptance means where no objection is made in writing by the buyer regarding acceptance of goods or services within 15 days from the day of delivery of the goods, the day of the actual delivery of the goods or rendering of the services. So, quite stringent provisions, and if there are hundreds of thousands of MSMEs dealing with our clients, practically we have no clue how we are going to handle it, because each of the invoices have to be examined. It does not go by, say, some assumption that, for example, if a regular supplier is there, he has been supplying for the entire 12-month period. Assume some invoices have been raised in April, and some invoices have been raised in June, and some invoices have been raised in October. Based on the estimated supplies from that supplier, if the buyer enters into an agreement for settlement of all the invoices on some average due date, I hope you know the average due date. The future payables as well as the past payables will be added based on weighted average, and a particular date will be decided which will not cause any loss to either of the parties, and the payment will be settled on that date. That is the average due date. The average due date concept will be good in commercials, but as far as MSME Act is considered, it is not recognized. You have to go based on the invoice date and the appointed date. You have no choice as an auditor or even as the client. We discussed this briefly. The payment time limit, if there is an agreement, then based on the agreement, it can go up to 45 days. If the agreement says 30 days, then it has to reach to 30 days, but in any case, not beyond 45 days. If there is no agreement for payment, 15 days is the time limit for making the payment. That to 15 days from the date of delivery of the goods or delivery of the services. There could be a situation that the supplier may issue an invoice on the 10th day, he may issue on the 15th day. It is not addressed in the Act. They say that from the date of delivery of the goods, the time limit for payment starts counting. And there may be instances where 15 days may get over, and after that you may receive the invoice also. That is not addressed. You have to make sure that the invoice also comes along with the delivery of the goods or services, and then only the buyer will have 15 clear days to make the payment. Supplier. This also we briefly discussed. As far as the MSME Act is concerned, an enterprise shall not be deemed to be a supplier if it is a micro or small enterprise which has not filed a memorandum, that's Udyam registration. Medium enterprise is not considered as a supplier, and large enterprise is also not considered as a supplier as far as MSME Act is concerned. Some due dates we discussed briefly. Say for example, I don't know whether it is big enough for you to read. I'll just read the headings of the table. Type of supplier, payment terms, date of supply, date of invoices, date of objection in writing, date of resolving objection, date of acceptance or deemed acceptance, due date of payment under section 15. First type of supplier, services. Assume the practice has been 45 days from the date of invoice. Whatever practice has been followed between the supplier and the buyer does not matter, because MSME Act itself defines the period within which the payment has to be made. So practice doesn't matter. Date of supply is 28 February 2024, but date of invoice is 15th March 2024. When do you think the payment will be due? Supply is 28 February, date of invoice is 15th March.
30th March.
28 March.
15 days from the date of delivery. Sure.
15 days from the date of supply, not from the date of invoice. Invoice may have a later date. So it would be 14th March 2024. You have to make sure, if you are in the client space, you have to make sure that the invoice also come along with the supply of the goods or services. Otherwise, you will still be liable to pay the amount within the due date. You cannot claim that invoice has been given later, I did not pay. One more example for manufacturing, say date of supply is 1st February 2024, date of invoice is also 1st February 2024. Date of objection in writing has been raised on 10th April. The date of resolving objection, date of resolving objection has been, I think there is some typo error. I'll give a different example. There is some typo error here, please ignore that. See, if the objection has been raised within the due date for payment, the time which has run until then will stop and it will be ignored, completely ignored. Even if the objection is raised on 14th day, or if there is an agreement for say 45 days and objection is raised on 44th day, the earlier 44 days or 14 days will be completely ignored, and the new time will start running from the day the objection has been resolved by the supplier or by the manufacturer or service provider, as the case may be. So perhaps it makes sense for somebody to raise an objection just before the due date for payment, not immediately as soon as he receives the invoice of the supplier, so that he can postpone it. And that objection should be in writing. And if the objection appears to be frivolous to the auditor, then you cannot ignore the previous period. So there may be some frivolous complaints, and which may not necessarily to be addressed. That should also be examined as a part of the auditor's responsibility. Section 15 applies when any buyer buys any goods or services from any supplier. We have seen the definition of supplier, and that's the reason I am highlighting the term supplier here. Section 2N defines supplier, that is Udyam registered MSE, others are not. Time limit for payment to the MSE supplier is covered in section 15, we discussed that. Section 16, interest on late payment. Interest on late payment, this provision says that the bank rate for the particular period as posted by the RBI in its portal shall be considered, and 3 times that interest shall be payable at monthly rates. So if we go by the present rate, which is 6.75% as appearing in the RBI portal, the rate of interest payable for the delay in payment is 20.25%, and it will be compounded monthly. Perhaps it may go up to 23 or 24% approximately if it is compounded. That is the rate of interest payable by the buyer to the supplier if there is any delay. And this interest is not a deductible expenditure. This provision was always there, and the auditors are supposed to report this in clause 22 of Form 3CD filed during the tax audit. Interestingly, this interest cannot be waived by the supplier also. He has to receive it, and buyer has to pay that. And if it is not done, auditor is supposed to report it. Because anyway, the government may not lose tax. Instead of, it will rather collect the tax twice, because the buyer will be denied the benefit of deduction. The supplier who is going to receive that has to offer it for tax.
TDS applicable.
TDS applicable, 194A. But the supplier can show it as income from business, because it's arising out of business contract, not from other sources. I don't know how many of us are seriously reporting in Form 3CD, because MSME Act strictly speaks that this cannot be waived. This is payable, and as far as the buyer is concerned, it has to be disallowed. Section 23 disallows interest for delayed payment in income tax assessment. Disallowance of interest on late payment under Section 23 is irreversible and permanent. Later, for any reason, say you make an advance payment to the supplier, you cannot claim the interest back, saying that I have paid an advance payment before the delivery of the goods or services. It's irreversible. Section 24 gives overriding effect to Section 15 to 23 over other laws. Section 24 reads, whatever the other laws in India may tell, Section 15 to 23 will prevail over all other laws. It would be income tax law, company law, whatever. So 15 to 23 are overriding effect. Now we have an interesting question. Say Section 43B H says, notwithstanding anything contained in any other provisions of the Act, this amount payable to MS enterprises shall not be allowed as a deduction if it is not paid within the appointed date, right? Section 44 AD and 44 ADA also have some provisions non-obstante clause. They say, notwithstanding anything contained in any other provisions of Section 28 to 43C, etc., based on the turnover, the income can be computed given percentage. It could be 8%, 6% in case of 4480 or 50% in the case of 4480. That amount or a higher amount has to be offered, and no other deductions could be available. Now, assume your client is opting for 4480 or 4480A, and there is a violation under Section 43BH. He has not made some payments. Should this amount be again added to the income arrived at based on the computation under 44AD or 44ADA? That is the question.
No, sir. This provision is applicable specifically only to those entities who have tax audits, sir. And secondly, for computation of presumptive incomes under Section 44AD and 44ADA, it is assumed that all the disallowances have already been made. So even TDS disallowances don't get attracted in those cases. So presumptive income is understood to be computed after allowing all those disallowances.
True, but the paradox is 43BH also says, notwithstanding anything contained in any other provision, the entire Act.
Sir, when there are two non-obstant clause, we can understand that they cancel each
Whichever
other.
is beneficial.
Whichever is beneficial, sir.
There is no reporting liability.
Yes, sir.
Yeah, reporting is the second part. Audit, audit is not required, is not the reason for you claiming an exemption or a deduction. That's a separate thing. So it appears to us that 44AD and 44ADA, 44AE definitely override 43BH. The logic I can give is the provisions which are mentioned in 44AD come much after 43BH. There are court decisions which say that if there are conflicting provisions, the later provisions have to be considered as valid. That's one of the reasons I can give. I don't find any other proper reason, perhaps some more research should be required, but it appears that 44AD and 44ADA do not get affected, or in case of violation of this provision, there is no requirement to make the additions. Deductions otherwise allowable under the Act. Assume a situation, your client is not falling under the provisions of 44AD or 44ADA. It may be some other provision, the 44AB or the regular cases, etc., whatever it is, and there is a violation for non-deduction of tax for the service provider. It should have been done at, say, 10%, for example, and it has not been done. So in such cases, what is the addition you are going to make?
30%.
30%, right? Clause, 48I. So based on that, if there is a violation or non-deduction of TDS, you are going to add back 30%. Assume that supplier is an MS enterprise. Again, under 43BH, are you going to add back 100% is the question. There you are adding back 30%. Under 43BH, are you going to add 100%?
Yes. No. Yes. Once it is disallowed, it is part in the P&L. So again, why I will add?
Only 70% has to be added back, because for the same mistake. the
No point
penalty
of
is-
deduction of TDS, okay, sir. When it is 100%, it is around 5%.
Yeah. But anyway, you have to deduct 100%, but you will have to divide it. That's why I wanted to stress on the term allowable. See, in case of violation for non-compliance with TDS provisions, you are going to disallow 30%. What is allowable in that case? 70%. So only that allowable portion has to be added back if there is violation of 43BH. That's what it appears.
So next year we are allowed to take the 30%.
Because
Because
TDS
in the
payment.
next year, disallowance, 30%.
And only if you make the TDS
But
payment.
these two different provisions, how can you consolidate it? There are two different provisions.
I agree. First, let me address that question. See, in the next year, if there is a compliance, both 30% and 70% you will be able to claim. Because if the payment is done, either for TDS or for, the payment to MSCE, 30% with regard to the TDS and 70% with regard to MSCE is possible. With regard to your question, the language which has been used in 43BH is allowable. So what is allowable in that case? They have used that word purposely. They could have mentioned the amount payable to MSC. They have not used that. They have used the term allowable to the extent it's allowed under the Income Tax Act. In this case, when there is TDS non-compliance, allowable is 70%. It can't be 100%. I would have agreed with you if they had used the word payable, then it would have made sense.
But if I report 100%, I mean TDS non-compliance has been done. But I will not show under TDS disallowance, I will show under 43BH. 100% added back. So that next year, no, there will not be any issues. Just because I deducted TDS, even though I deducted TDS, again I have to add it back 30% because of 43BH, because I did not pay to the supplier.
Disallowance is only on interest portion, and if I have not done the payment, you will add that. That is goods value, whatever it is.
Yeah.
So goods it is not
And
applicable.
goods, next year when we are paying it, it will be added back. We can claim that one. On the interest portion, 30%, why will I deduct only? Because 100% is disallowed for me.
No, I couldn't get you.
Interest for an X amount, there is a delay in payment.
Yeah.
So I have to charge at 20%. So I have to pay to the supplier. I have not deducted TDS.
Yeah.
And I will not deduct also because it is 100% disallowed.
Yeah.
So why 30%, 70%?
Penalty will get triggered for non-compliance of TDS problem.
Penalty will be there. And if it is getting audited, I don't know whether you want to sign that or not. If you are not the auditor, then good.
Suppose in the case where the supplier dealing with trading as well as service, and the trading value is 90% and service is only 0.10%. So which turnover we need to consider, both together or
No, you are not worried about the turnover. You will go by the status as appearing in the Udyog portal. Udyog portal will tell you into which category that particular enterprise falls. You need not have to check that.
Sir,
Yes.
sir, as per the books of accounts, the vendor's balance as on 31st March is 0. But if I go through the bank reconciliations, I see that the item that it is showing as check, it is yet to be presented. It has been presented in the first week of the April itself. So should I treat it as a payment made before 31st March? Because in books the vendor account is closed. Or should I treat it as an item of disallowance because it is more than 45 days? There is no malicious intent, sir. The check was passed, but the supplier did not present it for payment.
Yeah, under the Negotiable Instruments Act, there is a provision that in case a payment has been made through check and that check has been honored by the bank when it is presented, it has to be treated that the payment has been done on the day the check is handed over. So, assuming that the check has been given on or before 31st March, if the check has been presented subsequent to that, still the payment goes back to the earlier year itself.
So I can I don't need to disallow it, sir.
No need to make the disallowance. But if several parties have got checks similarly and all the checks are presented continuously, then the auditor's role is to dig more to find out whether this is the practice or this is the, yeah.
Suppose the balance is not there in the bank account, still they have issued the checks. On the day of present, they have made balances available.
See, it's not necessary that a person has to necessarily maintain sufficient balance. At the time of issuance of the check, he may not have the balance, and next day or say in a day or two also the funds may come. But as long as the check is honored when it is presented, the date of payment goes back to the date of handing over of the check.
So 3 months staying we are having.
Yes. It's possible if there is a genuine reason for the supplier to delay the presentment of the check before the bank. It should be a delay from the supplier side, not otherwise.
We will get the acknowledgement.
Yeah.
Sir, what about payments to fixed assets? Since it is not anyway taken into P&L account, what happens? Is there a disallowance separately?
No. There cannot be. There is no provision which says that the capital goods have to be disallowed because it is not an allowable expenditure. If you have seen the word, they have used allowable expenditure. It is not an allowable expenditure. And even you cannot say that depreciation arising out of that fixed asset should be disallowed because there is no specific provision. Whereas the Income Tax Act has such the provision in a different context. Here we don't have that. So if it is capital goods, then there are no worries. But you have to be mindful of interest payable.
Yes.
20% plus interest would be still payable, and that would be disallowed.
What about provision on this?
Sorry?
Provision for expenses.
Provision for expenses, it is a very highly litigated area. That itself is a disputed area. There are decisions which say that provisions where they are identifiable to a particular party, then it would be treated as the provision has been credited to that particular party, and therefore all the tax provisions and MSME provisions should get attracted. But where it is not identifiable, then the provisions are not the provisions do not get attracted.
Straightforward, sir. Provision for audit fees.
Sorry?
Provision for audit fees. How do you treat it?
It is, as far as provision for audit fee is concerned, when do you complete the service, that matters. Then only the right to receive that amount starts. The right to receive will start from the date you sign the audit report. Until then, even if the provision has been made, it will not fall into the mischief of 43PH.
We are going to disallow that anyway.
Yeah, you are going to disallow.
Just a small clarification. Just now you specifically mentioned that in case of a capital expenditure, 43BH will not recur. So in case of IT sector, so the majority of their expenditure would be towards the intangible asset and the development. So even in that scenario also 43BH will not get triggered.
Only interest part will get affected, not the actual payment due.
So any services that we are capitalizing in the books will not have an impact on 43BH.
Yes, because it is not an expenditure which you are charging against the profit and loss account. It cannot be treated as an expense otherwise allowable. The other thing is, assume a particular expenditure has been incurred, wherein the supplier has given some services, say in the month of May, and the payment has been made on, say, 31st March following, after about 10 months. 43BH will not come into play. 43BH will come into play only if the payment crosses the year end. Only interest will come into picture for such delayed payments.
The interest if is not demanded by the vendor.
Still it is payable, still it is disallowable. I mentioned at the beginning of the discussion, even if the supplier does not want the interest, Act treats that amount as payable and Income Tax Act will treat that as disallowable. Auditor is supposed to report. There is no right of waiver for the supplier. Perhaps at the most the supplier can collect it and he can give a discount next time while giving some goods or services.
He is not willing to take or he is not willing to give, both the parties. So still continuing in the books of account. So
Even though he doesn't have interest, doesn't want interest, I have to pay as per law. It is illegal from my side. I mean, I am not following the law.
But he will not pay.
No,
It will appear in the balance sheet as payable. Auditor is supposed to report it. In PCD also it has to be reported.
Suppose there is no provision made in the books for interest for all the suppliers. What is the auditor's role here? Should we comment or should we quantify the interest?
You have to quantify. If it is impossible to quantify, perhaps you will have to qualify, but you need to quantify that because the liability should be identified.
So the auditor has to calculate the interest and we should do the next to quantify.
As an auditor, two parts you have to examine. One is the interest part. Interest part has to be examined for all the invoices which have been received from the supplier registered as MSE. The other part is with regard to payments which have crossed 31st March of that financial year, you have to see whether 43BH would be applicable. 43BH is not applicable for any payment during the year. It is applicable only when the expenditure of one financial year falls into the other financial year, not otherwise. So to that extent, these provisions are simple. Some payable to MSE is overdue under section 15 of MSME Act at year end. Some payable to MSE outstanding at year end becomes overdue after the year end. Such sums are to be disallowed under section 43BH if claimed on accrual basis. The other part is, if your client is following the cash system, 43BH will not come into picture. Only if the party is following mercantile system, Then 43BH will come into picture. Later, I have prepared a very small flow chart where this will help you to understand how you have to identify a particular case. Disallowance is reversible in the year of actual payment. Disallowance is reversible in the year of actual payment. So, only thing is the tax liability will be payable if there is a delay in the payment in the year in which it was supposed to be paid but not paid. Next year, when you pay that, you can claim it as an expenditure. I have seen a case where somebody was telling, one of my clients was telling, that his total sales for the year was almost 20 crore and total purchases were almost 15 crores, and he has the practice of making the payment for all those cases after about 3 to 4 months. And he was asking me, this year perhaps I will have to pay the tax on the entire sales amount. Next year I will have to claim the loss. So will they give me the refund? Told him that perhaps you can carry forward the loss as long as you can set it off. Perhaps for 23-24, this financial year from where it started, many of the smaller organizations may face this situation. Whether section 43BH applies to the following buyer entities. Buyer entities following cash system. For cash system, it appears it is not applicable because you will claim the claim the expenditure in the year in which the payment has been made. So there is no question of accruing it and making the payment later. So obviously this provision will not be applicable. Buyer entities eligible and opting for section 44 AD, etc. We discussed that. Two contradictory provisions, non-obstante classes in 2 different sections. Charitable trusts and institutions exempt under section 11 to 13. This particular 43B is applicable only for those associates who have income from business or profession. Charitable organizations generally do not have that unless they call this charitable but do the actual business activity, and if the assessing officer thinks that they are into business activity, which happened in some of the cases, then perhaps he may say that 43B is also applicable, but otherwise it's not applicable. Buyer entities with income from business or profession, if they don't have income from business or profession, this is not at all applicable. Buyer is exempt from tax audit as turnover is 10 crore of receipts and payments were prescribed cashless modes. Doesn't matter whether the particular assessee is subjected to audit or not, but the provisions are equally applicable as long as he has income from business or profession. Let us see some of the situations with regard to the due date for payment and the due date for the actual date of payment. First column, purchase pertains to a particular year. Sorry, I'm just trying to make it a little bigger. It's not happening. Can you see? Yeah. Purchase pertain to. Second column is when paid. Next one is timely payment or late payment. Year in which deduction is allowable. Let's see the first example. Purchase pertain to period prior to 1st April 2023. This particular provision is not applicable, so you can be comfortable. If the purchase pertains to financial year 23-24 and payment is made in that year itself, and assuming that it's a timely payment, deduction is available in assessment year 24-25. And there is no interest liability also because all the payments have happened in time. For 23-24 financial year purchases, if the payment is made in 23-24, even if it's a late payment, still deduction is available in the same year because year in which it was purchased and the year in which the payment has been made are same, deduction is also available. Next one, purchase happens in 23-24 financial year, payment is in 24-25, timely payment has been made. Timely payment means up within the appointed date. It could be 15 days or it could be up to 45 days. Payment has been made timely. Then it will be deductible or allowable in that year itself. The question arises only when purchase is in 23-24, payment is in 24-25, and it is a late payment. Then it is allowable in the year in which the payment has been made. That is the following year. See, as an auditor, you need not worry about the first 4 columns. 80% of the things will be out. You have to concentrate only on the last part. But how you identify is a big question. Now, let us have a look at
the interest portion. The provision is to be made only up to 31st March or till the date of pay.
it has to be made only up to 31st March. You need not have to go beyond the financial year. Yeah. Let us have a look at Udyam registration number, how it is going to help us. If you get the Udyam registration number from each of the suppliers, you will be able to identify to which category they fall. So that there are 2 parts. One is status, micro, small or medium. If they fall into micro or small, your thinking and awareness will have to go up to think further. If they don't fall into that, you can forget that. Next one is whether they fall into service or manufacturing. If they don't fall into either of them, you can easily forget them. The other category which they may fall into is trading. You need not have to worry about trading category. If you want to identify the category of the supplier, there is no specific system. It is not based on PAN, it is not based on Aadhaar. You have to necessarily get the URL, you have to go to the given portal, you have to check, you have to enter the URL number, URL, and it will throw up all the details there. You have to do that exercise. No indication from URN of status. URN as such will not give you the status. The first part will say Udyam. The second part refers to the state in which that registration has been done. The third part refers to the PIN code, and the fourth part of that Udyam registration number refers to the specific unique identification number given to that particular enterprise. It will not identify, it will not help you to find out the category. If supplier has not put in his URN on bill or invoice, write to him asking to confirm whether he is MSc within 15 days, and if so, to share his URN. That has to be done by the client. If despite writing for the same and a reminder, URN is not furnished by him, you have to assume that he is not falling into that category and 43BH is not applicable. That is the assumption. What buyer entities must look for in Udyam certificate? Access Udyam certificate to Udyam number on Udyam portal. This is the link what we use, udyamregistration.gov.in. Date of Udyam registration will be given, and this provision will be applicable only from the date of registration for that particular enterprise, not prior to that. If somebody has got the registration done during the course of the year, the transactions done until that date need not be counted for the purpose of 43B. And if somebody has cancelled it during the course of the year, from the date of cancellation, the provisions are not applicable. Udyam registration is not retrospective. That's what I meant when I say that the previous transactions need not be counted. Supplies of goods and services made prior to date will not come under 43BH, and even interest need not be counted for that. If URC shows only trading activity, transactions with MSc URC holders are outside the purview of section 15, 16, 23, etc. No interest, no 43BH, etc. enterprise classification with effective date of classification will also be available in the Udyam certificate, which will be available in the portal. Role of auditor. We have discussed already. I'll just run through this quickly. Send out balance confirmation request to suppliers. Balance confirmation request should include a request to them to confirm MSC status and to furnish URL if MSC status is claimed. Check BRS bank reconciliation statement as on 31st March thoroughly. As regards checks issued but not presented, paying attention to dates of encashment. Check BRS for each month to see whether checks issued on due dates are encashed shortly after due dates or before that. If these are encashed after a long time and if it is a regular feature, then confirm directly the MS supplier as to date he received the check. And if he is also hand in glove with the buyer, you are helpless. Check disputes raised with MSC suppliers if there are any objections or disputes raised. Form 3CD has been amended recently in March, and that clause referring to interest disallowance which was appearing, clause number 22 has been modified. Now it reads like this. As an auditor, you have to report this particular amount in Form 3CD. Clause 22. Amount of interest inadmissible under Section 23 of the Micro, Small and Medium Enterprise Development Act, or any other amount not allowable under Clause H of Section 43B. So they have used a very plain language, and you need to do the exercise to arrive at the single amount. I'll quickly take you through a flow chart. Rather, I have prepared a couple of flow charts. Of course, some of the information is borrowed from many other well-known authors as well. Based on their analysis, based on our study, we have prepared this. I'll just take you through that. Due date for payment to supplier, as per Section 15 of the MSME Act, how you need to find out. I have explained, this is just a summary. You have to check each credit period agreed in writing by the buyer and the supplier. If the answer is no, then payment has to be made by the buyer on or before 15 days from the date of delivery of goods or services. If there is an agreement, then agreed credit period is 45 days or less, due date for payment to be computed based on agreed credit period. If the agreed credit period is more than 45 days, you have to count only 45 days. Here is one more summary. Applicability of 43BH to a buyer entity. Buyer entity, that's if you are doing the audit of a client, this is how you have to check. First question is the buyer entity carrying on a business or profession? No, straight away, section is not applicable. If you say yes, it goes to the left hand side. You have to see whether buyer entity is a company. Then obviously 43BH may be applicable, you have to examine thoroughly. If the buyer entity is running a business and profession, and if it is an LLP, then you have to go down further to check. System of accounting followed. If the system of accounting is mercantile, 43BH may be applicable. If it is cash, 43BH is not applicable. Next category of buyer, it may be sole proprietor, HUF, firm, etc. There you have to see buyer entity being eligible and opted for presumptive taxation under Section 44AE, 44AEA, 44AE. If it is yes, 43BH is not applicable. If it is no, then you have to see the system of accounting. If it is cash system of accounting, not applicable. If it is mercantile system, then 43BH would be applicable. You will have to examine further. Last slide. Deduction or disallowance under Section 43BH. Is applicability of Section 43BH totally ruled out? Based on the previous slides, if you decide that this disallowance need not be examined further. So if it is totally ruled out, go to the left hand side yes, then there ends the matter. If 43VH is applicable based on the previous slide, then if it is applicable, then you will have to see, does the supplier of goods or service to whom amount is owed during the year hold an Udyam certificate? You have to see. If it is no, section 43VH is not applicable. If he holds, you have to check further. What is the activity as per the Udyam certificate? If it is only trading, 43VH is not applicable. If it is manufacturing or service, then you will check classification of the supplier, whether it is medium. If it is medium, there is a complex exercise that medium enterprise based on certain provisions may still become micro or small, which is very remote, but still for the sake of completeness I have added it here. If it is no, then forget it. If it is falling into micro or small, or under the Udyam certificate itself it is micro or small, then you will check, is the amount outstanding at the year end beyond the due date and section 15 of the MSME Act. If it is no, then you have to say, is the amount paid after the end of the next year? Then you have to see paid on or before due date, then 43VH is not applicable. If it's paid after the due date, then 43VH is applicable. So there are very limited cases. But to reach that point, you have to run through this slide for each invoice. Alright, on this matter, let us conclude the discussion. Any questions? Yes, please.
So if you use the cash system, if you are accounting in the cash, suppose this is received 6 months back and you account now, then it will be delayed by 45 days. Actually, he supplied before 6 months.
But 43VH is applicable only when you are claiming the deduction. Assume the invoice has been received in January, payment has been made in July, say after 6 months.
But interest will be coming.
Interest will be there. Interest cannot be prevented.
But cash system.
43VH will not be there. Those provisions will not get applied.
Sir, during the year in enterprise, no, it got shifted from small to medium.
Yeah.
Micro, small and small to medium. Will there be any something like on Udyam portal that from this date to this date it is small and from this date to this date it is medium?
As far as I remember, they mentioned the financial year. Financial year. And in case of new registration or cancellation, date will be given. But the date from which they shifted, I haven't seen. That from this particular date they got shifted to the other one. And as per the provisions of the Act also, it's unlikely. Because they go by the investment and turnover for a particular financial year. And it may so happen for 23-24, a particular enterprise's turnover might have crossed a 5 crore from, say, 25 crore, to give a better example. And it might have shifted from small to medium. It might have got shifted because the turnover of 23-24 financial year. But for 24-25, you will be referring to the status as appearing in Udyam portal, and you will still take it as micro. Because last year, whatever details were available in the MSME portal will still be continuing as micro even though it got upgraded. Only after the status is changed in the portal, you will have to exclude that from that smaller micro category, not otherwise. So even if you very well know that it is no more micro or small, as long as the status is appearing in the portal as micro and small, you will have to follow all these provisions.
For during the assessment, no, which happens something like 4 years or 3 years or some later, that time how officers will get to know, sir, if the companies are shifted to medium, they will not have any history.
The details will be very much available in the portal.
Okay.
From whatever years, yes, it will still be there. And these days assessments get concluded in 1.5 to 2 years.
1.5 years.
We may not be able to have a full-fledged discussion. We will just touch upon some of the key points and we will halt. Perhaps after a few days or weeks, we will again go deeper into the matter. Is that okay? I hope you don't have any further questions on MSME provisions. You know the reassessment proceedings. The provisions of section 147, 148 are the key provisions which discuss the notice relating to reassessment. For taking up reassessment, there should be some escapement of income. Assume somebody has not filed the income tax return, or somebody has filed the income tax return claiming higher deductions or showing lesser income, etc. If the income tax officer comes to know about that, he can go to issue a notice for the purpose of reassessment. Until 2021, the provisions relating to reassessment were totally different. And in 2021, the Finance Act amended the provisions drastically, and too many changes have happened. And there are some Supreme Court judgments also. I am not going into the details of the Supreme Court judgment, but let me restrict myself to the present provisions, how they are and how they can affect us. Earlier, before 2021, there was a period when the assessment officer could go back up to 16 years if some assessees had any income or assets in a foreign country. But in other normal situations, if there is escapement of income exceeding a particular limit, he could go back up to 6 years. And if there has already been an assessment, then he could go back up to 4 years. So 4 years, 6 years, 16 years. 16 years was a very remote case unless the person has foreign asset or foreign income. So the regular timeline was almost 6 years. That was the regime which continued, I think, from 2001 to 2021. In 2021, they completely changed it. They claim that they want to reduce the litigation on reassessment matters, and also they want to reduce the number of cases for reassessment, and to make life simpler for people who have escaped income if the amount is insignificant. Section 147, income escaping assessment. Section 148, issue of notice where income has escaped assessment. They have introduced a new section called 148A, which refers to enquiry by the assessing officer before he takes up the reassessment. So if some assessing officer comes to know that somebody has escaped reporting income, then he has to issue a notice for inquiring about the information which is available with the particular taxpayer, get the information from him if he provides, and then take a call whether it's a fit case to go for reassessment or whether that matter has to be ended there itself. So it's a preliminary inquiry which will be done, and it will not be a detailed inquiry. That provision has been captured in section 148A, which has been introduced in 2021. 148B is also a new provision for the approvals for reassessment, etc. And these provisions go up to section 153, which discusses the time limit for completion of reassessment, etc. We will just briefly go through this. In the earlier regime, before 2021, if the income tax officer has a reason to believe, he could have issued the notice to a taxpayer asking for, issuing a notice for reassessment. There was no question of preliminary inquiry. Now, that has been changed to a different language, which says that assessing officer should have some information that the taxpayer has not reported particular income or claimed higher deduction, etc. So earlier reason to believe has got changed to availability of information, and they have also mentioned how that information should have been received by the assessing officer. If any income chargeable to tax in the case of an assessee has escaped assessment for any assessment year, the assessing officer may, subject to the provisions of section 148 to 153, assess or reassess such income or recompute the loss or the depreciation allowance or any other allowance or deduction for such assessment year. Anyway, these are the provisions of section 147. Conducting enquiry, giving opportunity before issuing notice. How this works? Let us have a look. No notice under section 148 shall be issued unless there is information with the assessing officer which suggests that income chargeable to tax has escaped assessment. It need not conclude that some income has escaped assessment. It is sufficient if it suggests, if it indicates there is some escapement of income. These words, languages are always questioned before the course. That's why they have drafted it quite carefully. Information suggesting escapement of income, in the section itself they have mentioned from where that information may come to the assessing officer. They have mentioned that as per the risk management strategy, if the assessing officer comes to know, then he can take up reassessment process. Final objection raised by the Comptroller and Auditor General of India. Once the income tax returns are assessed or income tax returns are processed, the C&AG office may audit those records to find out whether the assessment has been concluded in accordance with the provisions of the Act and also whether proper income has been assessed in that particular case. Until now, that's until 2021, until this provision was introduced, there was a view that even if the C&AG office believes that the income has not been assessed in accordance with the Act, the assessing officer cannot reopen the assessment because that would amount to change of opinion. Say at a particular point, if the assessing officer has got all the information required for the purpose of assessment, and if he has concluded the assessment saying that this is the amount of income which has to be assessed and tax has to be payable, after C&AG does the audit, and if they conclude that the assessment is not done correctly, assessing officer cannot go back and say that now because the auditor have found out that there is an error in my assessment, my opinion is changing, therefore I am going to issue a notice. That was not allowable. But now interestingly, this has been included, that may give a wide door for litigation. There are many cases going on before various high courts. Many of the high courts have taken a view that change of opinion even in the new regime, even if there is such a clause, is not permissible. But recently, Kerala High Court has given a judgment, I think just 2 months ago, saying that even if you call it as change of opinion, if the section itself says that because C&AG are of the view that assessment is not properly done, reassessment is permissible. The third one is any information received under an agreement referred to in section 1995, that is double taxation avoidance agreement or what we call as the treaties. Under the treaty, if India has collected some information which suggests that somebody has not reported proper income, assessing officer can take up it for reassessment. Any information which requires action in consequence of the order of a tribunal or a court, if they direct that reassessment has to be taken up, assessing officer will take up. The last one is the information collected under a scheme framed under section 135A of the Act, and that particular section refers to faceless collection of information, which is also called as e-verification scheme. All the clients, or most of the clients would have received some intimation or verification information from the inside portal. That is the information based on which reassessment is possible. In all these cases where the information has been received by the assessing officer, he has to issue a notice under section 148A to start the enquiry, and he should give a minimum of 7 days for the assessee or the taxpayer to share his opinion, or it's an opportunity of being heard, and that time limit should not exceed 30 days. And if the time limit given is less than 7 days, then the initiation of reassessment is invalid and it can be questioned. Deemed information suggesting escapement. The first part what we saw is the information, the second part is deemed information. This refers to cases of search, survey where information might have been captured, money, bullion, jewelry or other valuable articles seized or requisitioned on section 132, books of accounts which have been requisitioned or seized, they may have information, and that information may suggest that the taxpayer has evaded payment of taxes or reported lesser income. Then the assessing officer can take up such case for reassessment. Is it possible to reopen an assessment only because of change of opinion? That's what I just discussed. So, as the things stand up, it appears it's possible, but some of the high courts have taken different view. Kerala High Court has taken a view which is favorable to the income tax department. Issue of notice for reassessment under section 148. After the process relating to inquiry, as mentioned in section 148A, have been followed, that is the initial inquiry, where the initial information has to be given by the assessee to the assessing officer. If the assessing officer is not satisfied with that explanation, then he can issue a notice under section 148 and the formal reassessment proceedings will start thereafter. So, in fact, assessee will get two opportunities. First, at the inquiry stage, the preliminary stage, there also he can explain why he should not be put to reassessment, because he has declared all the income, he can substantiate his claim. And if the assessing officer does not agree, then there will be a lengthy process, and in that process also he will get enough opportunity to explain. Time limit for notice. I mentioned time limit with regard to the period prior to 2021, 4 years, 6 years and 16 years. Now let us have a look at the time limit permissible under the new regime started from 2021. They have given two types of time limit. One is a normal situation, the other one is a specific situation. Normal situation is where the notice can be issued within 3 years from the end of the relevant assessment year. 3 years from the end of the relevant 3 years from the end of the relevant assessment year, which translates into 4 financial years. After 4 financial years, in a normal situation, reassessment cannot be initiated. The other situation is specific. There are certain conditions attached to that. In such situations, specific instances, under those provisions, the assessing officer can go back up to 10 years after the end of the assessment year, which translates into 11 financial years. What are those? Notice can be issued beyond the period of 3 years, but not beyond the period of 10 years from the end of the relevant assessment year, where the assessing officer has in his possession evidence which reveals that the income escaping assessment represented in the form of asset, expenditure or entry in the books of account amount to or likely to amount to 50 lakh or more per assessment year. It should be per assessment year. So most of the salaried people will not fall into the second category in case they have made excess claims of HRA, excess claims of deductions, etc. They will fall into the first 4-year category, 4 financial years or 3 assessment years. And the finance minister, while presenting this piece of legislation before the parliament, mentioned that to save the small taxpayers from burden of keeping the records and documents for several years, they are reducing it to 3 years. And when we saw the act, we saw that it's possible for them to open up to 10 years also, which was possible only up to 6 years in the earlier regime. They had extended to 10 years, but with a condition if the amount is more than 50 lakh. Income limit should be more than 50 lakh, not the tax. For that purpose, for issuing the notices, there is a process which has to be followed. If the reassessment is being done within a period of 3 assessment years, then principal CIT or CIT has to approve it. If it is going beyond 3 years, then principal CCIT or CCIT has to approve it. This is also one of the important processes to be followed by the assessing officer. If the assessee comes to know that this process has not been followed, or even if it is followed where the approving authority has not applied his mind with a proper justification, the whole assessment can get vitiated and it can be challenged. So, I am highlighting a few things here. First thing is 148A notice has to be issued. it should have given a minimum period of 7 days to the assessee to respond. If it is less than 7 days, the assessment proceedings are invalid. And in case the internal process of getting the approvals have not been done properly, because the approval, who has approved, they have to mention in the notice what they are going to issue, in the order what they are going to issue. There, if it is not mentioned, or if you come to know that he might not have applied the mine, you can still challenge. Why this is important? This reassessment is a situation which is considered as an extraordinary. And if reassessment is taken up, obviously the assessee will have to go back and stand quite a long period back to collect all the documents, information, and if at all he is subjected to additional assessment of income, he has to pay a good amount of tax, interest as well as penalty. That's why these are the provisions which are challenged quite often. At the same time, while issuing the notices, as per those timelines, they have given a clause which says that old time limit simultaneously applicable. Say for example, earlier 6 years was the regular period beyond which the assessing officer could not take up a case for reassessment. Now they have extended it to 10 years. So there is some more extra room for the assessing officer to go back and inquire whether this provision can be treated as retrospective, and so that the assessing officer can go back to the 9th year or 8th year was the question. To address that, they have put a provision in section 149 which says that the earlier provisions of the Act which were there before the enactment of this amendment, that would still be applicable based on the time at which the reassessment has been started. So, if they could not have gone back beyond 6 years, now by extending 10 years they cannot go back. That's the principle which has to be followed. Still, we have seen quite a lot of assessing officers issuing notices for 8th year, 9th year also. It can be very well questioned. It's not permissible. Here we have briefly captured for the reassessment notices which have been issued in the financial year 22-23, where it's a normal situation until which until which assessment year the assessing officer can go for reassessment, and if the income which is escaping income is more than 50 lakh, until which assessment year the assessing officer can go back. I have not taken up the cases where such is involved, but I have taken up only the simpler part to put it in this table. Say, for financial year, if a notice has been received by any of your clients, where the assessing officer is referring to assessment year 22-23, 21-22, 20-21, it's very much possible for assessing officer to go ahead with the reassessment, because for those 3-year period, there are no restrictions. Assessing officer can very well take up, even if the income escape is say few hundreds or few thousand, it's possible. But if he has to go beyond assessment year 2021, then the income escape should have been more than 50 lakh rupees. Otherwise, it's not possible. If he goes back to assessment year 16-17, then you can take up a position that 16-17 could not have been taken up, because as per the provisions which were standing at that time, 6-year window was available, and 16-17 assessment year is going to the 7th year, and therefore reassessment is not permissible. Meanwhile, you need to be mindful of section 292 BB of the Act as well. In many of the cases, we have been seeing that the income tax assessing officer, while issuing section notice on section 148A, has given less than 7 days. I have live cases where they have given 5 days, they have given 6 days, not 7 days. But the assessee has cooperated in the assessment. Reassessment is concluded, and after the reassessment is done, huge additions have been made, and the assessee wants to go in appeal. If they had noticed that provision that 148A notice should give a minimum of 7 days, they should have questioned then and there, at least before the conclusion of the assessment, and that notice would have been treated as invalid. Because section 292BB is protecting the income tax officer, which reads, where an assessee has appeared in any proceeding or cooperated in any inquiry related to an assessment or reassessment, it shall be deemed that any notice has been duly served upon him in time in accordance with the relevant provisions of the Act. Further, such an assessee shall be precluded from taking any objection in any proceeding or inquiry under the Act that the notice was not served on him, not served upon in time, served upon him in an improper manner. So, whenever a notice comes, be mindful of the provisions of this section 292BB. Because if you cooperate, then that cooperation itself may go against you. Opportunity of being heard, we discussed this already. Minimum 7 days has to be given in section 148A, etc. When the inquiry notice has been issued, if the assessee gives an explanation, then if the assessing officer is satisfied, then he has to drop the proceedings. If the assessing officer is not satisfied, he can continue with issuance of section 148 notice. And in case the assessee does not respond at all or does not give any information, it will be treated that the assessing officer is not satisfied. And for that, he has to issue the notice and state because. And where the reply has been furnished for 148A notice, the confirmation whether to proceed with the reassessment or not has to be taken within 1 month from the end of the month in which the reply is received. Where reply is not received, within 1 month from the end of the month in which the reply should have been received. That is the due date given by the assessing officer in the notice should be considered for that purpose. But this initial inquiry is not necessary where search is involved. You can see the conditions, and also where any money, jewelry or valuable article is seized, etc. Where any books of account, etc. have been seized, or he has assessing officer has received information under the e-verification system. That is the system which has been covered under section 135A. Say that Insight portal is giving so much of notices or seeking clarifications, and if one of the clarifications refer to a case where it shows that the taxpayer has missed to report a particular income or underreported a particular income, then 148A proceedings are not necessary. He can straight away go to issuance of section notice under section 148. Where the notice has been issued under section 148, the first stage will be the assessing officer will be giving another opportunity to the taxpayer to file his income tax return, so that the assessee will get one more opportunity to report correct income in case the income which has been reported earlier is not correct. That has to be done within a period of 3 months from the end of the month in which notice has been issued by the assessing officer. So a long window has been given here for the assessee to decide whether he has to file a fresh return, if so, whether he has to declare any additional income.
Sir, still we are getting 30 days only.
You can challenge that. That clause has been amended from 1st April 2023. I also have seen many cases 30 days notice is given. You can very well challenge that. It's a procedural lapse, and it's a denial of natural justice. It's a claim you can take up. Reassessment can be made in consequence of an order passed by any authority in any proceeding under this Act by way of appeal reference to a tribunal or a court. I briefly mentioned this earlier. Now let us see the last date for completion of reassessment. The last date for completion of reassessment which has been initiated through issue of notice on section 148 is before the expiry of it has to be before the expiry of 12 months from the end of the financial year in which the notice is issued. Say if the notice is issued in April 2024, this financial year will end on 31st March 2025. From that day, within 12 months, it has to be completed. So it goes to 31st March 2026. For any notices issued during the financial year 24-25, the assessment has to be completed by 31st March 2026. Similarly, you can identify. And there are instances where assessing officers have passed the order even after that. So whenever an order is received, whenever a notice is received, check whether they are as per the strict provisions of the Act. There is no leeway for the assessing officer to give lesser time or issue the notice whenever he wants or pass an order whenever he wants. These are the basic things about section 147 and 148. I have tried to cover as much as possible within the given period. Hope to have one more detailed session later. Thanks for your patient hearing and thanks for your time.
Any questions?
Yeah, any questions please? Do you have any questions? Thank you.
Thank you, sir.
Please sit at love you, sir.
So thank you so much on behalf of Bengaluru branch for taking your time out and addressing all our members on a topic which is of prime discussion at this moment. So I request our chairman to hand over a memento to the speaker. Can we have a big round of applause to the speaker? Members, they are heartening to see you all like this, and please participate like this in all the study circle meeting. Thank you all for your participation. Good night.
Thank you so much.